Hello and good evening. Welcome to the Money Show, your daily guide to making smarter, sharper and more secure financial decisions. I'm Kavita Thapliyal and I'm here to help you take control of your money one conversation at a time, whether you're planning your retirement, investing in mutual funds, buying your first home or just trying to make sense of market noise. This is the show that puts your financial goals at the center. From SIPs to stocks to loans to life insurance, budget to bitcoins, we decode the jargon for you, simplify the strategy and empower you with insights you can trust, because when it comes to your hard-earned money, there's no room for guesswork, only informed, intentional choices. So stay with us, because at the Money Show, your financial freedom is not just our topic, it's a mission, and you can also be a part of this show. How can you do that? You can actually send across your questions on our WhatsApp number, which will be flashing now on the screen. That's the WhatsApp number, 865-797-4571, and the email ID is themoneyshow@etnow.tv. Any questions related to your financial planning, which includes your investments, your insurance, your loan, or any specific strategy for any specific goal, we have you covered through our experts. So that's the place where you need to send across your queries. But then let's begin, and today the show we'll be talking about life insurance. Imagine this: you are 75 years old, maybe even 90 years old, and your life insurance policy is still active. Not only that, but when you are gone, your family could receive a multi-crore payout. Sounds very comforting. Is that right? I'm sure. Welcome to the new trend in insurance. Term life policies that go up to 100 years. Yes, you heard that right. 100 years of coverage. It promises long-term protection, peace of mind, and a legacy for your loved ones. But here's the real question. Is it a smart move or just clever marketing? Should you lock yourself into a policy that stretches across nearly your entire life, or is traditional term insurance till 60 or 70 years much more practical? Are the premiums for a 100-year policy really worth it, or will it drain your finances in the long run? And let's not forget, how many people even live till 100? Will you truly benefit from this extended term, or is it just giving you an emotional sense of security? So in today's show, in the first of today's show, we'll break it all down. We'll talk to financial experts. We'll try and decode, how can you strategize this? Is this a financial trap for you in a disguise? Or is it just insurance marketing that we're talking about? So it's coverage, it's clarity, 100-year term insurance protection or perception. I have with me Varun Agrawal, Head of Term Insurance, Policy Bazaar. Varun, hi, good evening. Welcome to the show. And yes, it's quite trendy, 100 years of insurance cover sounds really fantastic. And that too with, companies coming up with feature-packed term insurance or life insurance cover. I want to understand, how different is it from a standard 30-40-year term plan? When we talk about a 100-year term plan, definitely, if you're someone buying it at the age of 30 or 40, the premium won't look as big. But how different will it be in terms of coverage?
Okay. Thanks, Kavita, first of all, for having me. If I have to talk about term insurance, right, typically when you take a term insurance, you take term insurance to cover for your liabilities. So what you want is that your term insurance is kind of there when your liabilities are there, and in case something unplanned happens to you or your family, or to you, so that there's something to take care of your family in case you are not there. So that is why you buy term insurance. Now, when you are looking at this premise, you believe that 30 to 40 years is good enough, because that is the time you will largely be earning. This is the time you will largely be creating wealth for your family. Now, there is another concept which is called whole life cover, which gives a term insurance for 99 or 100 years of age. Now, what this is basically, this leaves a legacy for your family members worth, let's say you take a 2 crore worth of term insurance or 3 crores worth of term insurance. And so whenever you are no longer there, the money gets to your nominee, and that becomes a legacy you leave. But we have to understand the cost of both of these term insurance, right? So if you take a typical 30-35-year term insurance, if you're, let's say, a 30-35-year-old, you take the term insurance till 70 years of age, you typically end up paying 20,000-25,000 rupees per annum kind of a premium. But if you take a 100-year cover, the premium kind of skyrockets to around 55,000-60,000 rupees per year. So the outflow is far higher. So that is one thing. Second, uh, in case you basically something happens to you between the age of 35 and 70, it is kind of same. And after 70, the problem is that the time value of money will start kicking in. So after 70 to 100, let's say there are 30 more years, and the 30 years later, if you had invested that money, the 25,000 in some other plan, even if put that money in an FD, you would have received a larger sum any which ways. So typically what we suggest to our customers and to the viewers as well is that identify what liabilities they have and for how long those liabilities are going to exist, and then take the term cover accordingly.
All right. Okay, let's just assume that someone wants to really offer a 100-year-old term plan. I want to understand what kind of professions are we talking about? What kind of a consumer base or a policy holder base are we talking about over here? Is it young professional, HNIs, or we're looking at legacy goals, that one can really accomplish by having this kind of life insurance coverage?
Yeah, so anyone who wants to leave a legacy for a family can offer a 100-year term insurance. In fact, I would suggest that one needs not go towards 100 years. They can also take a 85-year term insurance, right? The average Indian life expectancy is 70 to 73 years. Even at 85, there's a high likelihood that your legacy will be there, and the cost is far, far lesser than a 100-year-old term insurance. So for example, 100-year, if the price is 60,000, the 85-year cover would be around 40,000 odd. So that's the opportunity one has. And in most cases, most of the current insurance companies also offer an opportunity for you to take an exit on the policy, right? So if let's say your policy is still 85 years of age, at the age of 80, you can decide, I'm fit enough. I don't think I'm going to kind of now, my liabilities are done. I don't think I am expecting to die very early now, or I'm expected to die in the next 4 or 5 years. You can take your money back in the last 5 years or etc. at the age of 80, and you get all your premium back as well. So that is also an opportunity which exists and creates a good value for the customers if they are really thinking about leaving a legacy at an affordable price.
All right. See, it's always good to have a life insurance policy, okay? We all know about that. This is your first step towards having the right kind of a financial plan, or at least the first step towards it. But is it better to buy a term plan plus invest separately rather than commit to a ultra long-term policy like 100 years coverage?
So again, right, we have to understand the role which term insurance plays and the role which investment plays, right? Term insurance is largely to cover for uncertainty of death. So in case something happens to the breadwinner of the family, we don't want the family to have financial constraints, etc. in their life. They have to send child to schools, they have to send child to, they have to save money for marriage, they have to save money for their spouses, etc., etc. So in case something happens to the breadwinner, the term insurance is there for you. From investment perspective, you should have separate investment products which you can invest in for your financial goals. So you can have different goals. You want to buy a home, you want to buy a plan for your child education, you want to buy a plan for your child's marriage, etc., etc. You can actually invest in a separate product. The compounding effect in the first 10 years may not look very, very attractive, but if you look at a 30-40 years of period, that money kind of becomes very, very large. So yes, I would recommend that instead of going for a longer cover and which is very heavy on your pocket, take a higher sum assured, which, for example, if you're planning for a 2 crore cover for 100 years of age, take a 4 crore sum assured, which is more of 15x of your income, etc. So that in case something happens to you in the early age, your family is actually secured. And then think of investing the rest of the money into whatever products you like and kind of make some future investments accordingly.
Okay, let's also talk about features, okay, or let's talk about the special power pack features that we have in a 100 years term plan. Many 100 years plans come with return of premium options. Now, do they actually offer value over here, or is it a psychological trick because the other plans do have the same kind of feature? What's extra that we are getting?
Okay. So what I would say is that almost now all term plans have refund of premium kind of an opportunity. Then there are two types of opportunity. The first opportunity is basically saying that if you survive the term plan, you will get all your premium back at maturity. So if you take a 100-year term plan at the age of, let's say, 50, and then you are paying a premium of, let's say, 20,000 rupees, then maybe at 50 years later you get 10 lakh rupees back, right? So that's the kind of math it works out. But typically at this point in time, you are looking more at a few crores worth of legacy rather than a 10 lakh rupees, and 50 years later the value of 10 lakh would have sharply dropped because of inflation. Second is an opportunity. So this is called benefit on maturity or benefit on survival, return on premium on survival. The other opportunity, which now most of the term plan offers, is that you can decide if you take a cover till 75, let's say you can decide at the age of 70 or at the age of 65 that I don't need the term plan anymore because my liabilities are done. I don't want any more cover. I will take a special exit and I will get all my premium which I have paid till the age of 65. So that is another opportunity which is available. So now almost all term plan actually offers this refund of premium scheme without actually having to buy a whole life cover.
Let's also help our viewers understand the difference between a proper term plan, okay, and a whole life term policy or a whole life insurance policy. What are the difference that we are talking about over here? Whole life plan being a traditional form of a life insurance policy, a lot of people actually believe in it. How do we differentiate between these two kind of products now?
Okay. So I think from an Indian consumer, for the longest period of time, what we wanted is that if we are putting our money somewhere, we want to get something back from it. So when you buy a whole life cover, pretty much like a 100-year or a 99-year cover, you would believe that, okay, if I pay 10 lakh rupees or whatever amount over the next 40, 50 years, I will get 1 crore rupees, and which feels like a great IRR, etc. But in true sense, if you calculate the IRR would not be very, very high because over 50 years, the 25,000 rupees would have compounded significantly. Sorry. And if you take a 30-year term plan, your cost is typically lower. It offers the same benefits. It just offers the same benefit till the age of whatever you take, right? If you take till the age of 70, it offers the same benefit till the age of 70, which means that in case something happens to you, your family gets the same amount of money. And that creates a higher value, and then you can invest all the money you have saved. So if you have saved, let's say instead of 25,000, you would have ended up paying 50,000. You save that 25,000, and even if you invest in a very safe asset, I think the money which you will generate will be reasonable enough for you to have a good corpus after the age of 70, when you actually need that corpus for your pension or for any of the other financial liabilities. So that's what typically we recommend. But in case people still want to go for a legacy of a crore or a 2 crore for their family, they should explore 85 kind of a age and not 100, because the premiums are very, very high. And then over a time, we have realized that it kind of creates a big dent on their other financial considerations.
All right. One last question to you. What are some common myths or marketing traps consumers should watch out for in these ultra long term policies?
Okay, so one of the things people should watch out for is that people should understand that the average life expectancy is only 73, 74 years, right? So even if you are a very fit person and you take care of yourself, living beyond 80, 85 is kind of beating the probability really, really big time. So that one thing. So 100 is anyway a very, very big jump from there. Second, what you have to understand is that when you are refunding your premium, the cost of the premium, the money you will get at the end of 30, 40 years, that money, when you take an inflation adjusted view, will be very, very small at that point in time. So what you have to focus on is here and now. Take a term insurance which has the highest sum assured for yourself, because That is what, in case something happens to you tomorrow or something happens to you 5 to 10 years from now, that is the one thing which will protect your family from financial stress, right? And that is what we should focus on rather than thinking, okay, I see term insurance, you don't buy to live till 80, 85. You hope that you will live till 80, 85 and never use a term insurance, but you buy it in case something happens to you. That is what insurance is for.
All right. I think a lot of aspects, we really covered, but my time is also up. I did have a lot of questions for you, but then thank you so much for being on the show and helping our viewers with the basic understanding of, what is right for them when it comes to life insurance policy and specifically the right kind of coverage, in the form of a term plan. What should be considered in terms of years and in terms of benefits. Thank you so much for being on the show today. Thank you.
Thank you, Kavita.